People often ask me, can I roll closing costs into my VA home loan? And I get it. It's a zero down program. People want to have a home with no money down and just come to that closing and not have anything due. It sounds amazing, right? Well, in this video, I want to answer those questions and explain exactly how it works. So it depends. So in this particular case, we're talking about purchases. On a refi, yeah, you can do it. And that's a whole different video. We're talking specifically about a purchase. If you're buying a home, can you roll closing costs into the VA loan? And the answer is, it depends on the costs. So there is one fee that can be rolled into the VA loan, and that is a one-time fee called a VA funding fee. And so the VA funding fee on first-time use, when you get 0% down, it's a little bit over 2%, 2.15, I believe is what it's at right now. And so when you actually get the home, the actual loan amount is slightly over what you purchased. So say you're buying a house at 100, the loan amount will be a little bit over 102. Now there are other closing costs involved in buying a house, though. You got your title fee, you got your appraisal fee, you got your prepaids, your insurance, all that kind of stuff. And you might wonder, well, why can't I just put them all into the loan? Well, then you'd be at like 8 to 10% over the purchase price. So you'd be way over financed. And that's why lenders don't want to do that, because you'd be way over financing the loan, and it's bad for you and bad for them. It's bad for everybody. And so that's why you cannot roll those closing costs into a VA home loan purchase. Now, that doesn't mean you can't do it. It just means you can't roll it in. So what are some ways to do that? There are definitely ways to do that. The first one is called a lender credit. And so a lender credit is where you take a slightly higher interest rate to get some closing costs covered. Typically can't get enough lender credit to get all the closing costs covered. And right now in a higher rate environment, we typically don't even see enough lender credits to do that. But when rates were lower, we'd see these where maybe you could go 0.5% to 1% over, and you might get $1,000 to $2,000 in lender credit that you could use for anything related to the loan, including closing costs. And so that's definitely one way you can do it. The second way, which actually a lot more common, is to get what's called a seller concession. And that's where you write into the contract the seller to pay up to a certain number of closing costs, and then that would actually reduce your cash to close. And so what I would do is coordinate with you and your realtor to figure out how much you actually need in concessions, and you just write that in the contract. Now, the house would actually have to appraise for the amount that the contract's for, which often it does. And so oftentimes what I tell people is,